But let's also put the focus now on Sterlite Tech. The company saw strong fourth quarter this time, a profit growth of 77% and also reporting a revenue growth of 20%. Now, the company's order book also stands at a record high of about 5,200 crore. We have Anupam Jindal, Chief Financial Officer at Sterlite Tech, joining in now with the highlights of what really is a strong quarter. Mr. Jindal, you saw fourth quarter profit jump 77%. That's compared to last year. Give us a sense, is this a function of an uptick that you're seeing in demand for optical fibers? Take us through all the factors that played into this strong performance.
Yeah, so you're right that overall this fiber industry, optical fiber industry globally has been growing quite steadily, significantly at almost 17% CAGR rate for last 15 years. And this is all happening on the back of extreme data explosion, which is happening, which we can see all around us. And driven by the technology shift in the communication from 3G to 4G, and now a lot of countries and companies are talking about shifting to 5G and getting ready for that. Along with that, we have fiber to the home, which is basically taking fiber right up to your home, giving all the services on single platform, whether it is TV watching, video watching, or internet. So all these things are actually driving, and Sterlite is a unique company, the only company in India to have that capability of integrated manufacturing of optical fiber right up to cable. And we are also having our solutions offering now. So all these things are helping us gain that market. We are the largest one in the country. We have, so based on the volume growth which we have seen, driven by our capacity, and we remain one of the most efficient producer. So that is all driving the growth quarter on quarter, year after year. That has helped us not only just deliver the best quarter, but also the best year so far. And this momentum is going to continue on the back of this order book, which you just talked about, 5,200 crore. And 80% of that order book constitute this product order book, which is very unique to us. So this platform will help us not just deliver FY19, FY20, but beyond that, because this 5G technology shift is going to take at least 8 to 10 years all across the globe. So it's a Mammon cycle which we are riding on, and we continue to expand our capacity to serve this growing market. Currently, we are in the middle of increasing our capacity from 30 million to 50 million, and we are already midway through. We will be achieving that capacity fully by June 2019. But in the middle, we will have 40 million capacity coming in by December. So all these things will help us achieve further growth from here on, along with our service offerings, which are also going to be quite scalar from here.
All right. So just to clarify then, this incremental capacity that will be coming on board, how much of it will we see in fiscal 19? And is this on the back of this new plant that you will be putting in place this year? Also, where does your capacity utilization stand at the moment, if you could give us a sense?
Sure. So the first thing, in terms of capacity, the incremental capacity of 10 million is going to come in the current fiscal. It's likely by December 18, which will be before our fiscal year 19 ends. So we will see some benefit out of that. The full capacity, as I mentioned earlier, will be by June 19. So another 6 months from there, it will be there. We will have that capacity, and we'll be able to utilize it. As far as the capacity utilizations are concerned, in the optical fiber, for almost like 3 to 4 quarters, we are operating at 100% capacity now. In terms of the fiber cable plant, which is a downstream product and which directly goes to the telecom operator, there we were running at about 40-45% till FY17, but we have seen a dramatic increase in that capacity. Last quarter of the fiscal 18, we saw the capacity utilization going right up to 90%, and we expect that will continue maybe 90-95% kind of utilization. So we might have to take decision to increase our cable facility also in the coming quarter.
All right. So strong capacity utilization then, 90%. That's a big number. And I think quite a significant jump as well from previous quarters, at least last year. Now, if we talk about, the export front, it contributes to over half of your revenue for the full year fiscal 18, if I'm not mistaken. What is the export picture looking like? Are you seeing did you see a significant uptick in Q4? And looking ahead as well, what are the kind of trends that you're seeing for the export front?
Yeah, so this export is something which we have consciously driven. We are pushing ourselves as you must be knowing that our capacity of 30 million is in excess of the total demand of the country. While we maintain about 40-45% market share in the country, still the capacities are higher, and we have consciously driven our efforts to increase our market presence outside India. China has been a very long standing market for us. Apart from that, we have been able to develop Europe and various other territories as a strong market. Europe constitute larger share of export now. So you're right that more than 54% of revenue came in from these markets outside India, and that was on the against last year it was just 37%. So for 17 we just had 37% of revenue. Last full year we had 54% revenue, but if you talk about the quarter, it was 60% of the revenue. But very importantly, more than the percentage of revenue, we would look at an absolute value of export, which is continuously increasing. And the order book which we have, 5,200 crore order book. Out of that, 4,000 crore plus is towards product. And most of it is again from the export market. So as we move forward, I see that not only our inflow will continue to increase, but our share of export will also continue to increase in absolute value. As we are embarking on larger growth, both in terms of revenue and profitability, I see that percentage may vary, and we are not very sticky about that. We are keen that our total export continues to increase.
All right, so exports will remain a focus then. Which will be the markets really that you'll have in focus as far as being growth drivers for the export front? Because like you said, China is quite an important market for you, but we've seen the contribution to revenue in percentage terms just come down, at least for the fourth quarter. It's coming at about 13% versus 19% earlier. Similarly, your India revenue as well has seen a downtick, but like you said, Europe has increased significantly to about 27%. So which will be the markets in focus?
Yeah, so these three markets, India continues to be our market because we are Indian company. But outside India, China, Europe, these are the two focus market. Apart from that, we have Latin America, we have Middle East Asia, and then apart from that, we will continue to have a presence in Southeast Asia and African countries. So these are the geographies we will be focused. But a meaningful contribution will still come from China and Europe for near future.
All right, fair enough. Now, you've also reported your highest ever order book in any quarter. It stands at 5,223 crores. Now, that is an uptick of about 73% year on year. What are the kind of execution timelines that you're looking at for this order book?
Yeah, the good part about this order book is that not only it is serving our FY19 revenue, but also it is helping us secure revenues for FY20 and beyond that. So some of the orders are in fact for FY21 also, and that is again a very good sign that a lot of those overseas customers are trusting us for long-term supplies to them as a partner, and that positioning is not just by volume which we have, but also the technological solution we are able to provide them through our research and development team, continuously working with them to produce the products which can suit the requirement in a very competitive environment.
All right, and any color that you can give us then on these order wins? Are you seeing a significant improvement in trends if you talk about long-term contracts, for example?
Yeah, so the industry until about maybe 1.5 years back never used to be a long-term industry in terms of giving orders and contracts. We used to just carry order book to the extent of 1 quarter of revenue, 1.5 quarter of revenue in the product side. But over last 6 quarters, we have seen huge surge driven by global telecom operators and global fiber companies. They're driving this market towards a long-term market because there continues to be a very strong demand supply shortage on the preform side, where only limited players including Sterlite are there. So that way the market has gone for a strategic shift, that from a short-term contracting it has moved to long-term contracting, and we also prefer long-term, and we have partnered with a lot of new customers in this process so that instead of worrying too much on the spot realization which are higher, we can secure long-term volume contracts with them.
All right, fair enough. Then just a last question before we let you go. You've seen a very strong quarter this time, and a lot of it, like you said, is something that we can expect to continue going ahead. The demand picture is looking strong, exports looking strong as well. What are the kind of targets that you're putting in place for fiscal 19? Can we expect to see, many of these metrics remain at these elevated level, or are you expecting that you can expand even further?
Yeah, I think given our historical growth of very high compounding rate, we have delivered more than 45% of EBITDA growth. Revenue growth has also been more than 25-26%. We expect that the growth will continue. We have already communicated FY20 will achieve directionally $100 million of PAT. As we move further, I can see that confidence has only got better, and we can look at maybe expediting that number before FY20. How soon, we don't know. But more importantly, the growth is going to continue even beyond FY20 based on the macro trend we can see, the data explosion and the various applications which are coming in. We can see the growth is going to continue even beyond FY20 and maybe 21, 22, 23. So next 7-8 years, we can see a clear new trend emerging.
All right, 7-8 years looking strong as far as the Sterlite Tech goes. We leave it at that. Thanks so much. That's Anupam Jindal, Chief Financial Officer at Sterlite Technologies, on the back of a strong quarter reported for the fourth quarter by this company. But let's put the focus now on tech giant Wipro. A disappointing fourth quarter reported by the